Did you catch that Bitcoin just took a nosedive of over 7% right after President Donald Trump hosted a crypto summit at the White House? Did he go all in on Bitcoin, or did he just pull a fast one? Is Trump the culprit behind this drop? Let's dive in and find out. Welcome back to WildPod X. Tony here. Today is 10th of March 2025. Here on this channel we break down everything related to money, investing, crypto and psychology. If you want to stay ahead in finance, make sure to subscribe. Now let us take a look at today's market update. Bitcoin is broken down below the bull market support band, currently sitting at $82,000. And even under the weekly chart, it closed under the bull market support band for the first time in over half a year. Ethereum, which also pulled back to the $2,000 range, which is a critical and key supporting level. After checking on the price, let's get into today's morning deep dive. For the first time in history, a digital asset has become part of the US strategic reserves. Last Friday, President Donald Trump and key US politicians held a crypto-focused summit at the White House. Major industry leaders like Michael Saylor and Brian Armstrong were present. And the focus is regulation, innovation, and making US a leader in digital asset. There has been some significant political shift. US President Donald Trump has gone from saying he doesn't like Bitcoin to embracing it. Institutional adoption is on the rise, with more hedge funds, companies, and even governments getting involved. Bitcoin is being seen as a hedge against inflation and global uncertainty. The digital gold narrative is becoming more legitimate, positioning Bitcoin as a global asset, not just internet money. If Bitcoin is now being considered a national asset, countries like China already have a quite massive stash. And the US could start accumulating Bitcoin as a reserve asset. Real-world adoption is accelerating, with more countries and companies integrating stablecoins, blockchain tech, and whether we like it or not, CBDCs, Ethereum and Solana are powering decentralized finance, NFTs, and real-world payment. But here's the kicker. Retail is still pretty much clueless. Yes, most people have heard of Bitcoin by now, but how many of your friends and family actually own crypto? I say in the most cases, barely anyone. It means we're still insanely early. China holds over 194,000 Bitcoin seized from various operations over the years, and the US has 207,000 Bitcoin from seizures. If countries start holding Bitcoins, isn't it the time for retail investors to take it a little bit more seriously? It's funny how people are disappointed at this White House crypto summit. It's not long ago that none of this development were even in the wildest dream. There is so much greed in the market. If Bitcoin did end up retesting 69,000 to 72,000 range, it's shopping time. Now let us take a look at today's top news. The first news. David Sachs is taking a firm stance against a proposed taxation on cryptocurrency transaction. The idea behind these taxes is to generate revenue for the government, but Sachs argued that excessive taxation could stifle innovation and push crypto businesses offshore. The key issue here is how else is the government going to make money? They want their share of the booming crypto industry, but if they impose heavy taxes, companies might relocate to a more crypto-friendly jurisdiction. China's crackdown led to miners moving to the US, and high corporation tax has driven businesses out of America. Could this happen again with crypto? Zach's concern isn't just theoretical. History has shown that overtaxation leads to capital flight. If the US wants to remain a leader in the digital asset space, it needs to find a balance between regulation and innovation. Otherwise, spaces like Dubai, Singapore, and Hong Kong will happily take in crypto firms looking for a tax-friendly home. The second news. Some analysts are warning the delay in Federal Reserve interest rate cut could be sending the stock and crypto market into a bear phase. The logic is simple. Higher rates make borrowing more expensive, which slow down investment and economic growth. If rate cuts don't happen soon, market could react negatively. Is this just fear, uncertainty, and doubt? Every market cycle has people predicting massive crashes or skyrocketing gains. But the reality is, crypto have survived worse. So let's go crazy here. Even Bitcoin dropped to $50,000. Is it really a terrible thing? A 30 to 40% dip in a bull market is quite normal. And for a long-term investor, that is a great buying opportunity. We've seen those who panic sell end up regretting it. Meanwhile, those who accumulate during dips tend to profit in the long run. So we gotta change our mindset a little. When analysts are giving us warning and sounding horrible, smart money see these pullback as discount rather than disasters. And in our third and last news, Coinbase, the biggest US-based crypto exchange, is planning a massive expansion right after the crypto summit. The CEO Brian Armstrong announced that they'll be adding 1,000 new employees in 2025. And he said that this is directly linked to Trump's crypto-friendly stance, which provided regulatory clarity and boosted institutional confidence. This is a very big increase in staff, signaling a strong expectation for industry growth. More employees means Coinbase anticipate higher trading volumes, new product launches, and expanding global operations. So basically, Coinbase hiring spree is quite a bullish signal. Suggests that the major player expect the market to keep growing, despite short-term price fluctuation. That's a wrap for today's episode. Please subscribe for daily updates in weekdays. Stay invested, and I'll see you tomorrow.